What's up, YouTube? It's Joe Catchpolia sitting on the couch making some money investing in fractional real estate online. Today I'm going to look at a new platform. It's called Rentfi.io. They call themselves the REIT of the blockchain. I don't believe they're actually a REIT. I'm going to show you a little bit of info. I could be wrong about that, but from everything I gathered from looking through their site, I think they're just trying to make that comparison, kind of like how Lofty calls themselves the NASDAQ of real estate. I think they're just trying to say, okay, yeah, we're the REIT of the blockchain, trying to give you the understanding that you're buying into a pool of real estate assets. That's one of the things that wasn't super clear to me at first. Somebody pointed this site out to me, telling me this is another fractional real estate investing site. It made me realize that I keep running into people that are like, why aren't you investing in REITs instead of doing fractional real estate investing? I was actually talking to somebody today who told me, they were like, yeah, after we talked about fractional real estate investing, I went back to, my typical financial advisor, and they already do, they do that. He started talking to me about what he was buying. It turns out he's buying REITs through them. And that's still giving you exposure to real estate, but it is not the same thing that we're trying to do on this channel. It's not what I've been talking about as far as investing in fractional real estate. And so, well, before I forget, please like and subscribe. And in the description to this video, you'll find links to all the sites where I am investing in fractional real estate currently. Some of those links you'll get free money if you invest when you use them. You just have to read the terms and conditions on the site. And like I always tell you, do your own due diligence. Just because I buy on a certain platform or buy into a certain property, it doesn't mean it's the right answer for you. So you want to check those out. Also in that description, you'll find a link to a Discord where about 30 of us talk pretty much every day about fractional real estate investing, whether it's on Lofty, Ground Floor, Mogul, quite a few different sites. Sharing our ideas and opinions and working together to try to come up with strategies and maybe in some cases push either platforms or some of the other co-owners to operate in a way that is a little bit more conducive for to help us as investors. So anyway, check that out. And so because because this platform calls themselves the REIT of the blockchain, I'm going to go into this a little bit and what they're doing and what I think they're not doing. But then I'm also going to spend some time just explaining again. And I think I've done this in one other video, but I don't expect you to go back through, the 100 videos I've put out and find the other one where I've talked a lot about why I don't invest in REITs anymore. And I did. There was a time where almost all of my net worth was in REITs. I worked for two publicly traded REITs at different points in time, and have interacted with a whole bunch of others in other capacities as as an advisor and as doing financing with them and transactions and also all sorts of things like that back when I worked on the commercial side. But it's definitely not over time. I've gotten away from it, and I'll explain why that is and why I think why I'm so much more excited about investing in fractional real estate than I am investing in REITs. But so let's jump into what this one is doing first, because I don't believe it's a REIT, just based on reading their site. So what you're actually buying, so it is a portfolio of properties. Currently, there's 4 properties. They're telling you the rental yield and the total assets. It's a very new project. It looks like they have this little outline of when they started things and so it looks like they just started last year. They picked up a couple properties. They just recently launched their actual tokens, and so what you're buying on this site, they call them rent tokens. You can click on this link and it brings you to Radium. It's not something I'm familiar with, but this is a token on, I think this is the Solana or Solana blockchain. I mean, this is, you guys know I'm not a crypto guy whatsoever. So none of the chain names mean anything to me. None of the, whether or not that's good or bad. I'd love someone in the comments to, tell me what they think about this particular chain, if they think there's, good or bad things about it. But so you can click on this and you're buying these tokens, right? And so one of the things when I first got on the site, when you click on the invest tab, it does show you the portfolio and it tells you, okay, this is all the properties, and obviously it's new, so it's only 4. One of the things I really liked is, oh, they're international, right? They're giving me exposure to other markets. I think there's good and bad about that. The good is it's diversification, right? I don't have anything outside of the US. Um, the bad is that I don't know how the laws work outside of the US, and I don't know if I'm taking significantly higher risk by investing in some of these countries. I have been to Medellin, Colombia before. It was probably 1999 or 2000. So, I mean, I'm sure it's changed a lot in that time. Um, I've never been to Bali. I think I've been to Vancouver. I'm not sure. I've been to Canada a whole bunch of times. Um, but I'm just not sure if I have been to Vancouver or not. But so they're not markets that I'm very familiar with. I definitely don't understand, what the differences in their laws are versus ours. So the due diligence internationally is much more difficult. So that's one thing that I didn't really like about it. But like when you come into here, it looks kind of like, these are featured properties. You can view the details of the property, and they give you these, they give you a lot of details about that individual project, what the market's like, what the property is, how, the demand and whatnot. But then let's see, but when you click buy, they all bring you back to the same thing. So there's only one token. And so that token, um, at least as far as I could tell, it seems like there's no difference in which one you click. And so that token really represents income from all of the properties. And so they have these little, this is the rental income structure. They have this on each one of the properties. And so it shows, okay, they're getting rental income in the country. They're sending it to a property manager. It goes into this special purpose vehicle, is what I think the SPV stands for, something like that. These are used a lot in commercial real estate as sort of like pass-throughs and like places where income goes and gets split up. And so I've run into these quite a bit. That's where they pay the taxes that are local, right? Then they send that to Rentfi Limited. I think this is actually the company that we're dealing with. That this is the website. Yeah, this is company information here. They're in the British Virgin Islands. I don't love that. I'd much prefer to just have. I think that this is a tax haven, so maybe that's why they're doing that. But I'd love it if they were in San Antonio, Texas, so I could walk down the street and talk to these guys, right? So um, and maybe whoever is operating it actually is somewhere in the States and is just, has this set up there. Who knows? But so, it goes there and then it gets sent out to the rent token holders. And so when they describe how that's done, they have this 50-50 setup where 50% of the rental income gets sent out passively to the token holders, and then 50% is used to buy back tokens and to reduce the supply, which should create some appreciation. Um, I think that's perfectly fine, right? Like they're trying to create both income and appreciation. Um, we actually recently have seen people on Lofty doing this more where they're trying to burn tokens. I think it makes a lot of sense when you can really understand the value of the real estate relative, compared to where am I trying to go here? When you can understand the value of the real estate compared to the price of the token currently, right? Because if your real estate portfolio is worth more than the sum of all the outstanding tokens, well, then anytime we can buy and burn those tokens, we're getting, it's accretive to our portfolio. Where if the token price is too high, it could actually be hurting us to burn those tokens because we could be paying too high of a price in order to get, that, you know, get rid of the dilution, right? Where I can't think of the anti-dilution. I know that's not the right word, but you know what I'm talking about, I think. Um, but so, and that's I kind of want to just get into um, what I dislike about this, right? So why this setup, and it is, even though I don't think it is a REIT, or they're saying they're the REIT of the blockchain. Why I don't invest in REITs in general. I mean, I think there's really three main reasons. Yeah, I have some notes, so I'm trying to ramble a little bit less and keep these a little bit tighter. Hopefully that works. But so the first one is when you're buying into a REIT or onto these rent tokens, you're buying into a pool of assets, right? And actually, that's one more thing I wanted to point out in there. And here is that they specifically say rent tokens do not represent ownership rights in real estate, and and they're not securities. And so this is why I think, okay, we're not really talking about a REIT here. They're just using it as an analogy, not as what they really are. And so we're actually, these tokens are giving us some rights to get the income from those properties, but not actual property rights. So I think it's an important distinction, because if that income stops, I'm not sure how we go ahead and get access to how we get, I don't know what our security is, right? I don't know if we can foreclose on the property. It doesn't seem like it if we don't have any property rights. But so that's one of the things that worries me about this, where it's you're not, it doesn't appear that you're getting an ownership interest in anything that actually owns the property. You're just getting rent sent out to you. Um, but so anyway, back to what I don't really like about REITs and why I'm not investing in REITs, and why platforms like this are not attractive to me relative to investing in fractional real estate, where you're actually getting a piece of individual properties. And again, just because this is the right answer for me doesn't mean it's not for you. I know plenty of people that invest in REITs and make money, and so don't take that as like that's the final answer, right? And I get a little bit worried sometimes. Some people come to the Discord or message me directly, and they're like, "Hey, what should I invest in?" I actually get this more in real life than anywhere else. I'll be talking to somebody somewhere, and they'll be like, "Hey, what actual thing? Just tell me what to buy." And it's definitely depends on your situation and your risk tolerance and your time horizon. All those things. Matter. But for me, I want to be able to use my real estate knowledge to get an unfair advantage, right? If I'm looking at if I'm looking at a piece of real estate that I can buy fractions of just that one home, then it's very easy for me to figure out, okay, what's that property worth? And then is this token a good deal because it represents X% of that property? Um, if I'm doing the same thing and I'm getting tokens and it doesn't represent ownership in these properties, it represents a percent of the income from the property. Okay, that's already a little bit problematic because I don't know what happens when those property gets sold. But in addition to that, I'm not having to look at just one individual property. I have to look at the whole portfolio. And now today on this particular platform, that's not too tough. There's only 4 properties. But I would have to, figure out how to value properties in, right now, 3 different countries, that I'm not familiar with. Right. And so, but even in, even when you're buying REITs in the US, typically they'll have, tens or hundreds of assets, depending on what asset class they're in. And so you're having to actually analyze a whole portfolio of real estate just to figure out what your individual shares should be worth. And when you're doing that, it's publicly traded REITs give you a whole bunch of information to look at. This was when I worked as an analyst at a couple different REITs. Uh, in both of them, part of my role was to put together materials that would get sent out to investors. And um, one, it's not very timely. A lot of times those are quarterly or semi-annual reports and annual reports. And so you're not really getting to see what's happening in real time. But the other is you're not getting a full picture. There's only certain things that we put in there as far as, you're getting sort of higher level reporting. You're not going to know all the details of what's happening at each individual property. And so, one of the things that, because my rule number one for me, don't lose money, I want to be very certain in the assets that I'm investing in. And so it's much easier to get some certainty around an individual property than it is a whole portfolio. So for me, that's a big deal. And also, when I did invest in REITs, I spent all the time going through every report that came out, going through all the 10Ks, listening to the conference calls, because if you're not doing that, uh, you don't really know what's going on with your investments, right? And so for me, that's a big negative as far as REITs go. You have a layer of expense in the REIT entity itself, not usually they do have individual property entities that own the properties, and then there's a hold. Basically, the REIT holds all of those individual ones. Um, not always, but I mean that's the structure that I've seen most often, right? Like so there's a little bit of protection, between assets, but that layer, that company layer, there's a lot of expenses. So for example, they paid me a good amount of money. I had a nice office. We had really nice Christmas parties. Like all of those expenses came out of somebody's investment, and they weren't expenses that were directly related to operating in any individual property, right? And so, um, by me spending the time in analyzing individual deals on fractional sites, I'm not having to pay, I'm not getting, there's nobody that's getting paid for that deal analysis, on that next level. That, we do pay property management companies, and for a lot of them, um, and so that's somewhat comparable, but there's not that acquisition function that you're paying, right? And so, and there's not some office building that's rented by the REIT, and so there's all those expenses at that level that um, have to get paid by somewhere, and basically it comes out of our investment proceeds. And then the other thing is, and this is what I think is the most important one, is REITs are often motivated buyers. And so if you know anything about real estate investing, on an individual basis, right, buying properties, you're always looking for motivated sellers, right? Like, because when you have a motivated seller, you tend to get a better deal. Well, REITs are on the other side of that. They are motivated buyers, and you do see that sometimes in real life. Where people will have a 1031, so they have this extra motivation. But as sellers, we love to see 1031 buyers because we know they need to buy, and often REITs are, in the same sort of way. So they employ a full staff of, acquisition analysts, people whose jobs are to, and associates, people whose jobs are to go out, find deals, buy deals, close on deals. And so, I worked for, you know, it was like right up before, and yeah, actually just before the 2008 crash. I think I left the second REIT that I worked for. I think I left in the beginning of 2007. And so, those were boom times, and it was very different, almost everything being bought and sold in the asset classes I was working in made absolutely no sense. And one of the two REITs was actually smart enough that they just had me, sitting on my hands, not doing anything. And that was actually why I left there, because in retrospect, they were just smart, and they just didn't explain to me that, we were just smarter than the market. But the other one, we were buying stuff that in my mind just made no sense at all. Um, but they have capital to deploy. We sold some properties at these high prices. We had money to use. They wanted to redeploy it. They're employing all these people whose job it is to find deals. And so I really believe that there's a lot of suboptimal investment decisions that are made. And when you're buying a REIT, you just get a piece of you're getting a piece of all of their deals. You can't pick and choose, right? You can't say, "Oh, I don't want that property that they bought just because they wanted a beautiful property for the cover of their annual report." As crazy as that sounds, yes, I actually saw that happen. I mean, there's buying properties that in my mind made absolutely no sense from a financial perspective, but were like trophy properties that made us look like a bigger deal, and helped our share price, even though they diluted our income across the portfolio. So I never want to be in that spot where I'm having to buy a piece of every single deal when I know that there's some maybe incentives at that REIT level for them to keep buying deals in times when maybe I don't want to be buying deals, right? So like I made the purchase of the REIT today, let's say I did that, and then a couple of years from now, I think they should stop buying stuff, but I don't get any control over that. Where if I'm buying into individual properties on any of these platforms, I can pick and choose one, right? So I can use my real estate knowledge to actually help me find good deals. And even like on a site like Mogul, where it is, they do have that pressure. They're going out and continually looking for deals and bringing them to the platform. So they have some of that pressure, but I never have to buy one, right? Because I'm getting to buy into their individual properties. And so, I think that it creates a scenario where I'm not forced to take, the good with the bad, right? I can just pick the ones that I think are the best. And sometimes I think that that's probably really clear, and sometimes you might not know it because, for example, when you can imagine that when they're buying a property that they just want a nice picture for their annual report, even though maybe that gets whispered, it's very rarely said out loud, and it's definitely not flowing through into, the underwriting just gets tweaked until that deal looks like a decent deal. Um, I mean, all of that stuff is, I don't know, it's just you're not going to get as an investor in that entity, you're just not going to be able to see it, right? You're going to miss it. It's you might realize, hey, this deal doesn't look as good as all their others, but it's still on the surface going to look like, not going to be obvious that that's why they bought it. I think, that's the real reasons that I'm not buying REITs, right? And I just to recap, right? You're having to underwrite and you're having to look at you have to do a due diligence on the whole pool of assets, right? If I want to have certainty, gotta look at the whole thing. You have this additional layer of expenses. You have salaries and rents for your office workers, and then you have, buy as a buyer, the acquisitions people that might just have motivations that are different from yours, right? They're not always just looking out for what's the absolute best deal we can find. Another example. This is, sometimes, and this happens, people want to buy a deal in a market because you get to go do a site visit in that market. And hey, I haven't gone to visit, I want to go someplace cool that I haven't been before, and let's open up this market. And I mean that stuff, as much as it like sounds ridiculous to say out loud, like that stuff happens. And so, um, it is, you just, I don't want any of that to be part of the decision making when I buy deals. So when instead I get to go on these platforms and pick individual properties and use my real estate knowledge, figure out what that property's worth, and then otherwise, like, I'm really just guessing, right? Like, I can look at this chart and say, oh, well, this is how it's moved. But to me, technical analysis, when you're looking at stock charts and crypto charts, like, I honestly believe this is like astrology for men. Like, I think that it's in meaning, like, it makes you feel good about the decisions that you make, and it's right some percent of the time, but because it's partially vague, and it's like, oh, and there was a time where I got really into it, but I don't believe, um, and I think one of the reasons it works really well in crypto, for some things, is because there's a lot of people. It's the only way that you can analyze value in certain ones. Like, that's not the case here because you're backed by some real world asset. But in general, if you have a coin that has no use case, right, then the only thing that you can look at is your technical analysis, right, your charts. And so then that's all anybody's looking at. And so then you sort of get this herd movement. But in general, there's nothing like, this is not. I'd much rather look at the fundamentals, right? I'm a value investor. I think if you haven't watched my video on that, um, you know, uh, as far as like value investing and looking at fundamentals, and why I think that that's, the most important thing, right? I talk about that book way too often, but I read little bits of it all the time because I think it's the right way to look at things. Um, Look at this. I tried to not ramble, got really rambly, and I'm sorry about that. But basically all I'm saying is, when we're not looking at individual properties, the further from that we get, the more difficult it becomes to really value whatever the piece is that we're buying. Like these rent, I spent quite a bit of time looking at stuff on this site, and I could not tell you what my rent token should be worth compared to the values of these. Even if I knew the values of these properties, I couldn't even tell you what my token should be worth. And they give me, okay, so we have this total value, but I couldn't see, like, are those 5 million tokens, do I divide that over this value, or is there more cash out there that's going to be used, or I just had no idea. I couldn't figure it out. And so for me, that if I can't figure it out, I'm not investing in it, right? I'm never, like, unless it's like scratch off ticket money, like, that's basically when I first bought, the first little bits of crypto I bought, I just thought of it as that, right? Like, I'm buying into something I really have no idea where the value comes from. It's not any significant portion of my portfolio, and that's sort of how I would treat something like this, because it is, at the moment, I can't figure out how to value a rent token, and especially because it's not representing any ownership into the underlying asset. It's just giving me rights into some rent. But even beyond that, like, if we're talking about REITs in general, it is, in my mind, just so difficult to actually value your shares in a REIT that and there are these professional analysts out there, and you can just trust them if you want to. But I am just not in the trusting people business, right? Like, I want to look at deals on my own, figure that out, um, and make money or lose money based on whether or not I'm right or wrong. And although we do talk a lot about not having to be right, because of diversification and big discounts, right? And so if you don't know what I'm talking about there, I actually think that again is in that value investing video. So if you haven't seen that, check that one out. Anyway, if you think all of this makes no sense, please let me know in the comments. I know there's a lot of really big REIT believers out there, and I understand the benefits of them, and and I guess maybe I should talk a little bit about those, but I guess there's no real reason to, because I'm not trying to tell you to do those. I'm not trying to tell you to do what I'm doing. I'm just trying to explain why I've chosen what I'm doing, right? And the things that I don't like about REITs, and led me to the path of, it used to mean I would buy individual properties in the real world. And I didn't love that, because there's no, I mean, I did, for a long time, I was all in on that, and that still is where most of my money is. But it is, there's just so many more benefits by being able to buy little pieces of lots of properties, but not having to just buy this basket of little pieces of lots of properties. Now I'm really done. Until next time, I am going to just keep making mistakes so that you don't have to. Oh, we'll close that.